Welcome to Creekside Chats with Successful Real Estate Investors, brought to you by Steve Talker Capital, promoting prosperity and harmony to help you flourish in all areas of life. Join in as we explore the motivations and goals of real estate investors and how their ability to invest abundantly has provided them with the time and freedom to contribute to the world in a creative and thoughtful way. Now please welcome your host, Dr. Allen.
Today's guest is the founder of Sense Financial Services, a boutique financial firm specializing in self-directed retirement accounts. He owns multiple investment properties in various states and is a licensed California real estate broker. Over the years, he has taught hundreds of investment and financial planning seminars and has mentored thousands of investors, helping them maximize their returns on investments while protecting their hard-earned money. Welcome back to the show, Dmitriy Fomichenko.
Alan, and thanks, and it's great to be back.
It's good to have you back. We had a nice chat last time we were together and learned a little bit about you. There's a lot of things that we didn't get to cover because you've had quite the life here. You mentioned last time that you had to deal with the immigration experience. You were telling about those first years. You came to this country with some impressive credentials.
Yeah, my background is in electromechanical engineering.
You had already had those credentials, and yet when you came to the country, because of language barriers and because the immigration status and all was not totally finalized, you had to work in some not so glamorous types of jobs, particularly given the background and credentials that you had. I think you were doing some warehouse work.
Basically, when I got in, I didn't speak any English, and went to adult school to learn English as a second language, and went to employment agency. They found us, actually me and my three brothers, four of us, we got the same job or at the same company. We started together, and then later we split up and went our own separate ways. But very first job was working at a minimum wage, $4.75, and doing some assembly work.
Yeah.
That's what we did.
How long did that go on?
It's been probably less than a year. And then I picked up some English and got a better job as a technician at a smaller company. And then I went to a college to study, to take some additional classes, translated my degree, and got a better job. And then I switched job. I got a job as an engineer. And so that's approximately year 2002. That's when I got laid off from the job as being an engineer, and that forced me to look for something else. And I was at a local job fair, and I got recruited into a financial services firm. So I started my career in financial services. And about 2 years prior to that, I was introduced to real estate investing, came to a local real estate investment club, and purchased my first property in 2001. And so when I started financial services, I already had a rental under my belt, and I did that for a few years. And parallel to that was investing in real estate, buying more properties. And actually, my first two properties in California was a good time. I bought first in 2001 and second in 2002. And in about 4 short years, both of these properties, they more than doubled in value.
Wow.
So I had that, then I was able to pull out some of that equity and started buying new homes, new rentals outside of the state.
That was quite a lot going on in those early years, because you came to the States, in 2000?
96.
You had been here about 4 years. That's still pretty recent. You were still just adjusting to a new culture, new language. Even with all of that, you had gone out and purchased 2 properties. That's amazing if you actually really think about it, because there was a lot you were going through. You weren't a high wage earner. And so how did you manage to do that?
Again, I was attending a local real estate investment club, and there were regular meetings. I was attending that and learning. But so, as I said, I was able to pull out some of the equity and started investing out of state. And I continue to do that. And that's maybe something that your listeners can benefit from my experience, which was a negative experience. Again, I had a good experience, I had successes, but I continued to buy more than I should have. So I over leveraged, and I continued to buy into the kind of peak years into 2005, which was, the market was about to top at that time. And I picked up a few more properties. And some of them were in Florida, and that market been hit hard. When the market crashed, rents came down, had negative cash flow, and basically as a result I ended up losing several of my properties. I couldn't hold on to them because they weren't supporting themselves. So I learned the lesson that you gotta make sure that you don't over leverage, make sure the properties pay for themselves, and don't rush. There is do it slower rather than faster.
That's really good advice. And there's a lot of gurus out there in the real estate industry that would contradict you on that, and they just encourage people to leverage to the max. Of course, they've never been through a downturn like you have.
Well, Alan, and that's actually my actions were result of listening to one of those gurus.
Yes.
Acquiring as much properties as you can and just waiting for the appreciation. But the problem is market doesn't always go up.
Exactly.
And that was the missing link for me. You got to make sure that you can hold on to the properties. Yeah, you'll do long term. Properties will appreciate long term, but hey, you got to be prepared for unexpected. And when the market tunes, you got to be able to hold on to those properties.
Those were clearly some very trying times. The immigration experience, the 2006 to 2010 essentially period, were some very trying times for a lot of people. Dmitry, what are some of the personal qualities and aspects of who you are as a person that have actually helped to pull you through those challenging and not so pleasant times in your life?
That's a good question, Alan. And I think the short answer to that is don't give up. Have faith, don't give up. And I can expand on that specifically on my personal experience, but when I invested, and I actually co-invested with some family members, and there was a lot of pressure. Hey, it's a failure, you're a failure, and drop it. But I continued to persevere, and I continued to educate myself, and my credit was damaged. I worked on repairing my credit, paying off the loans that I had. I had a few short sales and a few loans were settled. So I continued to work. It was, difficult time, but I continued to persevere. And also going back to 2010, that was also a transition for me because the company that I was working for, I started a department there doing self-directed retirement accounts, what I currently do. And about a year later, basically company went out of business and I was presented the opportunity to go on my own. So I started my own company without much business experience, but again, continue to persevere, continue to learn. And at that time, I liquidated most of my portfolio because I didn't want to be dragged back by some of those rentals. And I got into private lending. A local investor friend introduced me to the idea of being a private lender, and I started putting my money into loans. So basically lending money to other people. I really like this way of investing. It's perfect for retirement accounts because number one, it's passive. You don't have to do anything compared to rentals, for example. The other reason is that it's pretty nice return. I'm typically getting double-digit return, 10+% on my money. And then the next one, it's a low risk. Your investment is protected by real property. As long as you do your due diligence upfront, then it should work out just fine. And I've been lending for a number of years, both using my retirement funds as well as my personal funds. But the challenge that I had with private lending, specifically using my personal savings, is that the more income I receive, interest income, the more taxes I paid. There were no deductions. And because I almost completely liquidated my rental portfolios, I had very little deductions. So I started looking at alternatives, and that was multifamily syndications, because that's real estate. You actually invest in a larger project. You don't involve in management. You let the experts do that, and that provides you all the benefits. Actually, some probably even more than just a single rental property, because there are some other things that you can take advantage as cost segregation strategies and things like that. So it actually gives you great tax benefits. And personally started transitioning some of my portfolio of loans into syndications, and it worked out great.
The difference between syndication and private lending is that as an equity partner, you actually are an owner of the property, and so you're getting all of the tax deductions, whereas with private lending, you're nothing but a lender, and so your total income is interest. Is that correct? Is that what?
Yeah, interest income that you receive from being a private lender, that's taxable income. There is no deductions. There is nothing really to offset that. You can potentially do it as a business, and I looked into that, but it's not really worth it, because if you're going to set up that as a business and do like a portfolio lending, then you'll be subject to self-employment taxes. And so that's not a major change there. So again, for me, specifically for my personal investing, I think private lending is probably the best way to invest your retirement funds. I continue to do, and I will continue to do, because again, it's no-brainer. It's passive, nice return, and very small risk. In fact, maybe I'm going to share this example that might be also beneficial to your listeners, is the ability to what can be the worst case scenario for you. So basically, I made a loan, one of the loans outside of state. Somebody introduced me to this company. It was a company, not a private investor, but a company that had a portfolio loans. I made a loan for $38,000 at 9%. Was getting about $350 a month, or exactly $350 a month in interest payments based on those amounts. It continued for about 3 years, and then the company was mismanaged, the portfolio was mismanaged, and they started paying late, and then a month late, and eventually they fell behind. And it was a somewhat stressful time for me, because again, that was a new experience. And so what happened at the end, basically, I negotiated with them deed in lieu of foreclosure. I didn't have to go through the foreclosure process to get the property. They just signed the deed over to me. So as a result, I missed a few months of interest payments, but I ended up with the property. And the property, I owned that property for about 45 years now. And it's been rented at $675 instead of $350 interest payment, and it's worth about $65,000. And my original investment was $38,000. So I probably got my original investment back now, or maybe very close to it, with the interest payment and the rent payments. And I still own that asset that produces income. So your worst case scenario in a private lending can be pretty nice, actually, again, if you do your due diligence and if the asset is there that secures the investment.
Doing your due diligence on a single family home out of state, there's got to be some challenges. Talk to us about those challenges.
Obviously, you have to make sure the value is there, and the property that you're lending has the value in there. And now, actually, what I do is I work with two brokers who bring the deals to me. So I don't just lend to people. I actually have a client who is in this business. He's a wholesaler, and he acquires some property. So I made a couple loans to him as well. But it's basically, I agree with you, just looking at something that is out of state, and if you don't really have a relationship and a track record with the borrower, it can be challenging. But the loans that I do, again, they doing their due diligence, they're doing the vetting, because they actually pretty much lend in their own funds and upfront. Then I come in as an investor. That's probably a better way to do it. Of course, you can do it on your own, but you got to do your due diligence. Make sure the property is there to secure the investment.
That makes sense. What's impressive to me, the way that you come through these setbacks and these dark times, and you just keep on coming back. All kinds of things have been thrown at you and all kinds of setbacks, yet you have always turned those around and made something positive out of the negatives. So there's a lot of resilience within your personality. Where did that come from? It's hard. That's a hard question.
No, I don't know if I can answer that question, but I had an entrepreneurial spirit from the younger years. Even as a teenager, I did some kind of business projects. And again, I came from the former Soviet Union, where opportunities were very limited. Even I can tell you what I did. I sold ice cream. I was in the town that there was a major railroad station. And during the summer months, there were number of trails going through our town, going to the south, to the sea. So a lot of people who are going on vacation, they will pass by. So I will buy a box of ice cream, and let's say it's 20 cents each piece. And then I will bring that box onto the train station at the time the train stops, and I will sell them for $1. Okay. So 5-fold profit. Now I had to deal actually with some sort of a mafia there, because there were some, that's another story, but that's just an example. Again, with those limited opportunities, you can still find a way to make it. But here in the United States, it just, your opportunities are limitless. You can do anything you want. You just have to have a desire. And unfortunately, a lot of people don't realize the back and not doing anything, but it's a beautiful country with so much potential for everybody.
Yes, you have to have some faith and belief in yourself. You certainly have developed a great deal of that. I'm sure that has something to do with your resilience. How old were you when you were selling the ice cream?
Maybe I was still in high school. I think maybe 14, because at 15 I went to college. I didn't finish the high school. I went to college and I took some specialty classes as well as some GE classes. So at 15 I went to college, and that was prior to that. So maybe 13, 14.
Wow. Well, whatever gave you the idea to do something like that?
I don't recall exactly. Maybe I've seen somebody else do that. I don't recall.
It's interesting to me that you clearly are an introvert. So many people in this industry are quite extroverted. It's always encouraging to me to see that people outside of that typical mold are able to make it and thrive and flourish in this industry. It takes knowing and understanding yourself and knowing your strengths and learning to work from your strengths. You've discovered a way to do that. Of course, along with all of that is knowledge, and you've always taken advantage of educational opportunities and have educated yourself. You also learn from your mistakes and setbacks. You don't over leverage anymore. You've learned how to protect all of your assets in a number of different ways. A remarkable life. In closing, how do you help other people?
As I mentioned briefly, when I was working at a local real estate investment company, because of my experience in financial services and my background in real estate, and I was given an opportunity to start a department doing self-directed IRAs, because many of our investors had the money in their retirement accounts, and we tried working with several different custodians. None of them really worked out long term. So I started that in-house, so to speak. And then about a year later, I went out on my own. What we do is we specialize in creating self-directed retirement accounts with checkbook control. And that includes a checkbook IRA, which is a self-directed IRA held by the custodian, allowing alternative assets, plus special purpose LLC. This LLC is owned by the IRA and managed by the investor. And that gives the investor checkbook control over their retirement funds. They invest through an LLC. That's how I started. And then about a year later, I learned about solo 401k, and we added that to the list of services that we do. So, which not a big list. We only do two things now. Checkbook IRA and a solo 401k. Now, solo 401k is a vehicle. It's a retirement vehicle designed for those people who are self-employed or own a small business without full-time employees. So basically small, like sole proprietors, pretty much. Or if you own a corporation, it just can be you and your spouse. You can have part-time employees working under 1,000 hours a year. If you do have employee working over 1,000, then you have to offer them 401k benefits as well. So solo 401k will not work in this case. But this is a truly amazing vehicle with several major benefits. Number one, contribution limits is nearly 10 times higher than an IRA. With an IRA, you can contribute $6,000 a year. With the solo 401k, that limit is $57,000 a year. If you're in your spouse and a business together, you can shelter well over $100,000 from your income, from taxes. which is amazing. That's can be equal to $20,000-$30,000 in tax savings in just that single change that you can make in your financial position. But also it does not require a custodian. It is basically set up as a trust with a client being the trustee. And as a trustee, they control that. So they control the trust, they control the investments of the trust. In the same manner, they have a checkbook control. So they can open a checking account for a 401k trust and buy properties, whether it's just single family investments or do private lending out of their 401k or invest in other projects like multifamily syndications. You have pretty much unlimited investment potential. You control that, gives you great tax shelter, and then the money that you contribute to your 401k, you invest in tax-deferred environment. So you invest, but you're not paying any taxes on the growth. By doing so, you allow your wealth to grow much faster because it's not being pulled back by the taxes if you did that personally. So that's what we do. That's how we help clients. I practice what I preach. I invest with my retirement account, and that's what we do to help people.
Dmitry, it's been a pleasure.
Thanks, Alan, for having me. It's been fun over those moments. Again, it's been challenging, but educational and fun. I hope some of your listeners will benefit from that.
I'm sure they will. Thank you, Dmitry.
Thank you for joining us on Creekside Chats with Successful Real Estate Investors, brought to you by Steed Talker Capital. For more information, as well as access to our free ebook on enhancing your well-being through real estate investing, be sure to connect with us at steedtalker.com. As part of our efforts to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine and enhance the humane treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. Connect with us at steedtalker.com.